Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which is relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of which is relied upon as any full advice at all. It is just general in nature only. South32, I've said this before, I refer to them as the rainbow miner. They have everything and almost anything inside their overall book, and they were the spin out from BHP because they didn't want them, which in hindsight may actually have been a little bit of a misnomer, considering what they do hold is still very, very good. Guidance around production and capex and estimates around EBITDA in 23 and 24 have actually been done on a strategic review and have been revised by about 1% for FY23 and 7% for 24, which is not bad. On a discount flow model though, there is sort of an issue about a 4% decline in the midterm on production and cost efforts, because part of the strategic review and what they have released is about maintaining long-term asset profitability and long-term asset lifetime. That I think needs to be pointed out very clearly, because this is what it's all about. So capex is now being moved up to $180 million US, again, safety, reliability, improvements of life extension, etc. They also expect to put a direct $250 million into the Hermosa mine, along with also transitioning their 4 key outlets. And let's really get to it, because everybody wants to just talk about the production. Cannington, Karamazino, Illawarra, and the manganese mining. If we have a look at Cannington, medium-term guidance has been lifted for zinc and for lead. So from about 45 and about 90 to 50 and to 110 kilotons of zinc to lead, with silver also now moving up to about 12 mega ounces. It's a reasonable recovery, and the operation is on track to meet that guidance in FY23. So it's not bad to see that from Carrington. Karamazino planned for the furnace refurbishment. If they want to get their overall longer term view done, they need to get this done. Nickel is clearly going to be a major metal going forward, and they know this. So spending the money now probably makes sense. It's about extending that lifetime. So you therefore probably will see an interruption to the overall production in FY25 before returning to normal in FY26. But the strategic review highlights why nickel is the future, and they're willing to take that pain now rather than sometime later when they may be behind the 8 ball. Illawarra met coal. This is always an interesting one. They are still doing quite well there, but they need to transition to a longwall configuration, and that therefore means cost. That probably explains why the capex has jumped up where it is. They are doing an increase in ventilation. They're trying to make sure that health and safety is an absolute core paramount, considering that government crackdowns on this space is quite high. It will therefore interrupt FY25 all the way through to FY27 with these changes. And again, that may therefore mean that with met coal being out, it might actually benefit them slightly, because they're going to be one of the biggest providers of met coal on the planet. And if you take production out, that therefore means you are going to have a change in supply and demand. So just watch that space. It does mean a negative for the overall business in the interim, but that cost and that unknown price change may actually offset that change. Watch that space. Finally, the manganese project. The Eastern Lease South life expansion is on. Again, it's all in FY25 in terms of when it's going to happen, because realistically it starts at the start of next calendar year for FY24 and will take 18 months. So the majority of it will sit in that number. Again, it's actually pretty low capital, only 44 million, but it's a high returning project. Internal rates of return are over 50%. That is very impressive, considering someone like its peer, BHP, does do things on an internal rate of return of about 18% or more. So over 50, that's really good. What we'd also point out is this: at the moment, South32 is probably trading at a discount to peers. It is not iron ore exposed, and therefore doesn't have the issue around what is expected to be a China steel downgrade over the next decade. And that's why South32 is an interesting one, because being that rainbow means that it's diversified and it has its fingers in almost every future metal that you can think of.